Let's see what we got. Few of you in. So you can ask questions at any point. Anything that you're thinking about. But what I'm going to do is just kind of break down quite, just a way to approach the market really for next week. In some respects, it doesn't matter what you're going to trade. It just matters that you have a relatively good idea, and it's well worth making some notes. If you want to make some notes in whatever way you want, you can make it on Word, or you can make it on Excel, or you can just write it down in a booklet somewhere, just to kind of give yourself an idea of what you might want to look at for the week. But a great place to always start, really, because it is the kind of king daddy, is the dollar. So let's share my screen and start with that. So as I say, anything you've got to ask, you just ask away. I've got my chat box open and we can talk about it. So let's talk about the dollar to start with. Now, what we've really got with the dollar, this is the DXY. Are you guys seeing this okay? I can change the background if it's a bit dark for you. So if the view isn't so good, let me know, and I can easily sort of change things around. But if not, then I'll just crack on. So what we've had with the dollar, we've had this push down, as you can see, since November of last year, and a really nice trend to the downside. Lower low there, lower high, coming down, creating another lower low, lower high, another lower low, lower high, another lower low there, and then it was kind of trend over of in the most kind of clean sense, it was kind of trend over. You could certainly say this is a bigger low and that's a bigger high. That's a high there, but you might need to change to the weekly chart to really see that. So on the dailies, it was trend over, then it was trend again, down, lower high, lower low, lower high, lower low, and then we've got this kind of consolidation kind of period here. So if we think about this in a kind of stage 4 downtrend and then just holding, this is looking like a stage 1, maybe even a stage 2 uptrend now. So we've got these this area of consolidation, and from this point, it's still in line here pretty much with this downtrend. But as soon as this bar happened on the 15th of January, then it starts to kind of look more like upside than downside. So there are a couple of kind of levels that the dollar will need to take out. That's really one of them. It takes that level out. That's going to open the doors really for another push higher, and where it goes we don't know. But this is looking more bullish. But it might bash its head against this area. But you can see here that it's still got a little ways to go before it gets that area, which is around about looks like a 6%. No, 0.6% move in the dollar. So not quite 1%, but it looks like it's going to start edging towards that particular area. Definitely could still come down and test some lows. If you look at on a shorter term time frame, then we've got this base here. That looks like a pretty good base. So at this stage, if you were to enter the market cold without any setup, that to there, yeah, it's probably not got enough room for a 1-to-1, but it does look like it's going higher from that particular point anyway. So dollar looks like it's displaying some form of strength. If we look at this on a weekly as well, and just make sure that we've got the longer term position covered as well as the minor position. There's the minor trend. Here's the intermediate trend, which looks again like it's broken out, but this is a range. Yeah, let's check out the monthly pivot as well. But this is a little range here, and probably going to stay within this range. It looks like we're just kind of ranging on the dollar on the weekly chart and climbing. On the monthly, it looks a lot more positive. This still looks like an uptrend with a little glitch here, but it still looks like an uptrend and holding down here. So dollar longer term looks like it's poked through this trend line here. That looks like it's heading higher. So knowing that and making that assumption on the dollar, let's have a look at the monthly pivots. Have I got the monthly pivot on this? Let's have a look. Monthly pivot, I've got it down below on the dollar. This is the dollar index, so monthly pivot is well below. So dollar looks good to go to the upside. So that really kind of puts some pressure on oil, gold, and in the indexes. So if we have a look at gold next, what we have with gold, definitely looking toppy here, and it looks like there's a trend line here that it's just taking its way through that we saw on Wednesday, tested it on Thursday, and it's rejected it Friday. So gold, by all intents and purposes, right now looks like some downside is coming. How far that comes down, we'd have to go to the longer term time frames. There's obviously some support here, so taking out the low is going to see it down another leg probably. And on the monthly, because it's so high and near this well, what is now a quadruple top, I think some further downside. You know, looking at that, it looks on without really destroying the bias to the upside, the ultimate bias to the upside. So gold could easily push down what looks like $100 to the downside over the course of the next month or so. This could start to weaken. That is probably going to be dependent on the yield. You know, do we see the 10-year yield continue to increase? I think some of the confidence that the Fed are about to pivot on interest rates is starting to dissipate, and that may well push gold to the downside. The other thing that could push gold to the downside without those 10-year yields popping up is maybe some confidence coming back into the global market, which if you look around the equities making all-time highs, that's kind of happening. So people aren't buying protection right now. They may well already have their protection in place. You know, we've seen some amazing runs in gold over the last couple of years. They may well have enough protection in place and feel like, okay, you know what, we can just shave a little bit off here as equities push higher. Did see a little bit of stress coming into the Nasdaq last week. So this also supports a stronger dollar. And that you know, no doubt that the most important level here is the previous all-time high set back in 2021. So the Nasdaq could push down, but you know, never an easy task trying to short the Nasdaq particularly. So I'm not sure whether I'd go for a short, but it's well worth looking out as a barometer to see whether the dollar could push higher. Now, oil is the other one we should really look at to see what kind of confidence is in. And we saw a big boost last week in the oil market. So a big boost in the oil market plays into a different type of equity. Now, even though the dollar is strengthening, it's not necessarily the case that oil will weaken. I would prefer, now we're so close to resistance, I'd prefer to see oil through here before taking on the long. Because from here it does look like it may well retrace a little bit, but you know, the dollar might only push up to that previous trend line that I was saying about and then start to weaken. So we might see oil start to pick up as well, but it looks like there may well be some strength coming through with oil, and we are seeing inventories come down a little bit. Now, if the oil market is to take off, you see that there's a correlation with the FTSE. And look at what happened with the FTSE, just a massive move on Friday. With the FTSE up in the end, well, what looked like a 100 pip move to the upside. So it was a big move, but really that started on Thursday. So from the previous day, the FTSE climbed 140 points, which is a you know, that's a decent move for the FTSE. Equating effectively to a 2% move to the upside over the course of 2 days, and you can see how sticky it's been, how badly sold off it has been as well. Yes, there looks like some retracement could come in, and looking back at the oil market, that would match where we are with the oil market as well. But ultimately, if this one can come down and find some footing around about the $75 mark on the futures, 75.50, then we have another bash at that level, possibly even creating a little reversal, a pattern here. We can see a little inverted head and shoulders of some sort. You know, definitely some accumulation, and maybe just coming down for one more look down here. then that's around about the 75, 74.50 level. And then we could maybe sort of like try and get it up here and maybe take some profit there and see on the retest where we can add that back in again if it pops through. But but the oil market looks okay, which is to say, which would boost the FTSE, and because of BP and Shell being such huge players on the FTSE 100. So the FTSE out of the equities, you know, maybe it's one of the more positive. Could also boost the ASX 200 as well because of the commodity space in the ASX 200. So we might see the Aussie market also move to the upside. Let me see if I can move that away. That's it. ASX is here. The AUX, sorry, AUX 200. AUX 200 had a decent run. It's right on resistance as well. So that would match maybe a turnaround in oil, maybe coming down a little bit and then finding some support. And that one could also go. Now, when we look at this, that really draws us towards what's going on with the Aussie dollar. Now, the Aussie dollar is probably the one currency that is suffered the most against the dollar. And it doesn't, from Friday, it doesn't look like it's ready to turn around. You look at the weekly chart as well, we are on support, maybe a bit of indecision towards the end of last week, but there could be a little bit further to go down here, or at least some continued bottoming out in this area. So even though the Aussie is not necessarily a good short because of maybe it being, you know, at the closer end to support, it's not a long. You know, I wouldn't want to go long on the Aussie next week either. The CAD is the dollar CAD is also, you know, looking like some upside. They held interest rates. The interesting thing about the CAD, now I'm going to bring some other background data in here, and that's on the COT data. If we look through the COT data, look at the Aussie. This is what's been going on with the speculators with the Aussie recently, selling it off, and that's matched what's been going on. But the CAD's a bit different. You know, they came in last week for the CAD. Now that may well halt here, but the fact that there was some buying suggests that the CAD may not be as weak as it looks, and that would take me away from wanting to go long dollar CAD going into next week. The Swissie's relatively flat. We haven't really seen anything going on with the Swissie. I think this is probably one of the more interesting currencies to short in the coming months, because if things are turning around, there is a lot of benefit to trading the Swissie short, because number one, we'll have a look in a minute, but number one, the price action has been so heavily bought up with the Swissie, so everything else has been sold off against the Swissie. And number two, the swaps. You know, you're going to get paid positive swaps. So you can go Aussie long against the Swissie, pound long against the Swissie, dollar long against the Swissie, Kiwi long against the Swissie, all that stuff. That's going to be interesting. So what I want to see really is this genuinely turn around. We didn't see massive selling last week, but there was a little bit of weakness, but it's relatively flat. The euro is when it does start to get interesting, because they've got now, we'll look at a driver this week, but look at what's been happening with the euro. People are clearing out of this one. You know, after a really, really positive move to the upside, there was a big sell-off, a little rally, and now we're starting to sell off again. So does this push below again? Now, this is this week's COT data. So next week, do we see some further selling? Well, that looks like a good case. And if we compare it against the most bullish so far, it's CAD euro. So the euro CAD as a short looks to be the play in accordance to COT data. Pound has also seen some buying, but it just started to ease off last week. Now, maybe the reason that we're starting to see a little bit of indecision with the pound is because of the Bank of England's rate decision this week. So that might be a little key to say, stay out of the way until that rate decision, and then let's see what happens. The yen is still selling off a little bit. Well, the yen did see some sell-off last week. Bit of disappointment came out from the BOJ. I think that, you know, the statement was a little bit woolly. They basically said that there could be some intervention that really could have pushed the yen either way. And that's really what's happened. The yen hasn't moved sufficiently, but we did see some selling off of the yen last week. And the dollar is not really getting much support, so that doesn't push us towards the dollar. You know, there is And then there's been a sell-off on the dollar, but it's just that really all that's happened really with the dollar with the speculators is that they've slowed down their selling. But that does bring us towards CAD as a potential long and the euro as a potential short in accordance to COT. So now if we bring the COT data in with the CAD euro, euro CAD, we have seen on the day a massive move down on Thursday after a big move up on Wednesday. So the sellers, and this is really beyond after the COT data is recorded, because they record up until Tuesday. So they're really recording up until this bar here. And we saw, just some easing to the downside on this one, a big boost to the upside. If we'd had that information on the Tuesday, we could have had a bit more confidence to sell the rally, but we didn't have that. But that, now we've got this big move down. What this is suggesting again is sell the rally. Gary, you point out the monthly pivot on the previous chart. Well, we've got another one here, another monthly pivot. Now that's suggesting that if we can get around this area of resistance, monthly pivot, weekly pivot stacked up there as well, that looks like a pretty good place to sell that rally in accordance to the COT. Now the current dailies are there, but of course that won't be there by the time we get back. But on support wouldn't be a good place to sell it. But a rally up here would look good. Somewhere in this zone here would look good. So I'm up for a Euro CAD short. That's what that's suggesting. Euro CAD for a short. But we need to see a better price than we've got. Now I was going to talk about the oh yeah, Robert, what have you got, mate? I can see your hand raised. What have you got? You ask away. Just plonk it in the put it in the questions box if you've got a question, and I will get to it. Now, I was going to talk about the Swissy, because if we have a look down, the CAD Swiss is a good example. Look at this. Just months upon months upon months of downside for the CAD Swiss. And if we look where we are, we're right on top of resistance here. So if we can pop up, this is going to start looking like a false break. This is kind of Jeff territory. Potential false break to the downside. Now, we got a couple more days before the end of the month. Have we got 2 or 3? 3 days. 3 days going into next week before the end of the month, so the 31st. So it's basically got 3 days to do something. Now, after that 3 days, there is so much room to the upside. You can't see or hear anything on your screen. Okay. Is that your end? Is everybody all good on your end? Okay. Maybe do a reboot, Robert, would be my suggestion, if you can't hear me. Let's do that. There you go. So we got a few days to go. Now let's have a look at what the likelihood is that we get a 3-day rally. Now, when we look at this on the weekly, look at this. This is very different on the weekly. This suggests it's already up. It's already gone through the level. Now I can see a little trend line here, which I'm going to do on my dailies. So remember, one of the reasons we're drawn to the CAD is that COT data. Now look at that on the daily. This line looks correct. We've got a touch here. We've got a touch here. We've got a little bit of price action here. Price rallied to that point and rejected that point. You can. Great, Madan. That's fantastic. So this suggests that this is the trend line. Now, again, we might need something of a reversal pattern here. We might be waiting for this to be our left shoulder, this to be our head, and we're going to need sort of something similar with the right shoulder on this side. So it's going to be looks like a something like that. Now, if that is to happen, that is going to be, we'll count the bars. In the middle is about 37. So it's around about here. So it's around about the second to third week in February, before this happens. However, even though it could bubble around down here, the great thing about the CAD Swiss is that looking at the monthly, it's so low that it won't matter where you get in to put in with a stop at the lows, because it's got such a long way to go. If it goes, it's been so heavily sold off. When this turns, if as long as it doesn't take out the low, there is lots and lots of risk to reward that that is at play here. Even to this level, there's a near 3-to-1. So if it can pop up, and what I'll look for next week is the CAD to do something like this, the CAD Swissy to do something like this, pop to the upside, take out that level, and then really, it's kind of your choice. Where do you want to get in? Well, anywhere where it comes and retest and hold would be good, but it might well decide that it does want to, just hug this line just for a little while before going and create that inverted head and shoulders. If it might be that we're looking at creating something like this, but that won't matter, as I say, because you can get in anywhere along here with stops at the lows. And the great thing is, every day you hold it, you get positive swaps. So it's one of those ones that time is in your favor. As soon as you see a signal with something like this, time is in your favor. The timing is not a problem, because it's not like if you were trading the Aussie yen as an example short, or anything against the yen. If you're trading the yen long, then you have to get your timing right, because you don't want to be holding it for any longer than you need to, because you get charged. But with something like the CAD Swiss, does everybody understand the dynamic with that? If you don't, I can explain it in a bit more detail. But with a CAD Swiss, you can hold this for as long as you need to hold it, as long as you don't get stopped out. You'll get it? You all understand? Okay, fantastic. So the CAD Swiss is a great option. And yeah, no problem, Adan. So when you look at a product, if you go over to your Market Watch window onto that product and right click it, you'll see specification. And when you click that specification, it brings in what it costs you to hold the position. And all you're really looking at is this area here. Let me see if I can bring in this. You want to know this here, the swaps for long and the swaps for short. Now, when the swaps for long haven't got a minus next to it, you get paid to hold. If the swaps have got a minus on the, it says swap short. So if you were to go short on this, you get charged on a daily rate 9.83 of a standard lot. But if you get your swap long, you get paid 2.54. So for every $10 you hold, they're gonna pay you 2 effectively for every day. If you hold it for if you go short, they're going to charge you 9.83. So you better be right. You better make sure that you don't. This is coming down, and it's coming down on the day you trade it, because you're going to get charged every day, and it's going to eat into your profit. So all you got to do, as I say, look at your Market Watch window. Look at the. No, you got it right. So look at your pair. Click on specifications, and it tells you whether you're charged or whether you are deducted. Sorry, whether you're charged or whether you're paid for holding the position, and you're looking at swap long, swap short. That's all you need to see. Okay, so This, if you buy it tomorrow and it doesn't take you out, you're already making money. Now, that doesn't mean you should buy it, because you still want to see price action which suggests it's going up. But the good thing about a positive swap is you can be a bit looser about, not looser, but you can be a little bit more confident that if your time, because the thing is about the market, you don't know the timing. Our timing signals, our signal to get into a market, it just really tells us whether we've got some buyers or sellers. It doesn't tell us whether they're going to actually sort of like take the market at that particular time. But if we hold on to the position, then we can not worry about the timing. Now, for that reason, stops in this area, even though would pay more if you kind of get your timing, because your risk to reward is better. If you were to sort of like enter somewhere here with a stop down here, much better risk to reward, but still much more chance to get stopped out. But you know, you get stopped out and then it comes up, very frustrating. But if you put your stops down here, wait for it to move and go, and then start to move the stops up and add the rest of the position, then you know, you're almost in the same position, almost in the same scenario. But the great thing is that every day it kind of stays in this area waiting, without, even if it dips, it can do all of that for as long as it wants. As long as your stop's protected, you're getting paid. So it's well worth looking at the CAD Swiss and the dollar Swiss and all of these ones. You know, look at the dollar Swiss, same thing. You know, is there a chance this could go up? Yep. So if there is, obviously it needs to come through this level, and you might want to still pick your area down, maybe the monthly pivot, stops at the lows. If there is, you look at the specifications. This one also pays swap long 6.5. It pays a lot more, actually. Swap short minus 10.5. So this one pays even better. Now, the reason that they pay, and the reason that you'll know, you know, which ones are going to pay you positively and which ones are going to pay you negatively, is when you look at the fundamentals and look at the interest rates. Anything with the higher interest rate, so the dollar 5.5%, ECB 4.5%. So this should have a positive swap if you're going short euro dollar, because you're going long dollar. So this is how they're working out the swaps. So the tighter the spread between the interest rate numbers, the less swap you're going to get paid. But look at the S&B, 1.75%. versus the Bank of Canada 5%. This is why the dollar pays more, because they're at 5.5%. So you're looking for the higher interest rate versus the lower interest rate. The BOJ is another one. You know, you look at you know, trading the dollar versus the yen as an example. The swaps on this one, on the long 14, on the short they're paying negative 25. So you know, the spread's in their favor. But that's why it's not worth shorting or going long on the yen unless you're really, really certain that it's going. You know, and you can be a lot looser. If you look at something like the dollar yen, you can be a lot looser about where you get in. You could get in this area rather than needing to wait for a signal, because you've already taken out the high. In this area, you're getting paid. So, you know, get in and hold on. Now, with the Euro CAD, their interest rate is a lot tighter. So the long swap is negative, but the swap short is 1.32. So you don't get paid a lot, but you will get paid. So that means that with a Euro CAD, you still want to be pretty, you know, you want to be sure that it's not going to take you out. And this is tight. You know, stops in this area, you're going to need to trade this in a regular way. You can't put stops all the way up there. Because it could come up there over a short period. But look at this on the monthly. This is looking negative on the Euro CAD. So looking at the COT data, this is suggesting some weakness with the euro. So that's what I'm looking at anyway for next week. So Euro CAD is a long. I'm definitely looking at the CAD Swiss long as well, because Euro CAD is a short. Sorry, CAD Swiss is a short, is a long. And really, because we've seen that COT data with the CAD is, you know, that they are sort of, you know, they did buy a little bit last week. If we look at drivers for the week, just to kind of finish up, big week really. We're looking at trade balances from New Zealand. That could be a bit of a driver for the Kiwi. Nothing on Monday of any note, but we do start getting GDP from Europe on Tuesday. I don't think that's going to be the ultimate driver for the euro, but we do get that. We get jobs data on Tuesday from the United States. CPI. So this is going to be a driver for the Aussie. So watch the Aussie sort of have some volatility this week. And we've got HPIs, which aren't going to be a big thing from the United Kingdom. GDP from Canada, there's a driver for the Canadian dollar. That's on Wednesday. This is when it starts getting interesting for the euro. Thursday, CPI data. This is going to be the driver. Ultimately, you know, not to say that it won't move around before, but this will be the ultimate driver probably. And we get the Bank of England voting on rate decisions on Thursday as well. So so a big week. ISM manufacturing is going to be important from the United States. Some PPI data, the jobs market as well from the United States on Friday. So we're looking at the tail end of next week before we kind of get before we get what's going on. You know, we won't get a really good feel, which is another reason that when you look at this CAD Swiss, if there is a sign and signal to get in, nice wide stops would be the name of the game. You know, because any of those numbers could really kind of like move this around. But you put a nice wide stop on the bottom and look for this to be the low of the move. If it's not, it's not. But as I say, you know, this is an important trend line on the monthly chart here. So it looks like if this, now this needs to be a false break for this to go higher. And if this is a false break, then it's less likely that this is going to get tested again. So nice wide stop on that, holding onto it with some nice positive swaps, start getting paid some money, and then just see if it does bottom out. And you won't care. You know, this could float around here for a whole year, and as long as it doesn't take your stop out, you're going to make money for nothing and have a position on, with the chance that this could go all the way from with a 140 pip stop right the way to 1,400. So there's a potential 10 to 1 if you are able to hold that right the way back to the highs of 2022. Right, then that wraps us. Any questions, guys, before I push off? Be pretty clear about what I'd want to do anyway for next week. CAD Swiss and Euro Swiss are the two things I'm looking at. Swiss is very tightly correlated with this with the euro as well. You're welcome. You're welcome. You're welcome, Nixon. Great. Okay, fantastic. Have a great week, guys. Let's see we are when the next time we meet. I'll see if I can make a note of this and we'll see if we can remember what it was that we talked about. Have a great week, and I will speak to you all very, very soon.